Investors, hello! This is the AI Crypto Insights channel, bringing you a few minutes of AI-powered insight into the market. Just a quick reminder, this is for educational reference only and not investment advice. Today, we're parsing Cointelegraph magazine's Holders Digest for January 4th through 10th to see what's really moving the needle. Let's jump right in.
All right, first things first, let's get a sense of the scale we're playing with. The total crypto market cap is holding strong this week at a massive $3.09 trillion. Now, that number is a big deal, and it really sets the stage for the pretty significant institutional moves we're about to cover.
And you know, a market that big, it's going to attract some serious players. That brings us to our first major theme this week. Institutional infrastructure is getting a huge upgrade. We're literally seeing the foundational layers of the crypto market being reinforced by some of the biggest names you can think of in traditional finance.
And here's a perfect example. We've got NASDAQ and CME Group teaming up to unify their crypto indexes. Now, this is way more than just a simple name change. It's a really powerful signal that the market is maturing. Like NASDAQ's Sean Wasserman said, investors are now looking beyond just Bitcoin, and this new, much broader index is the proof in the pudding.
And this institutional scale is also showing up in some pretty mind-blowing future projections. Get this, Bloomberg Intelligence is forecasting that stablecoin payment flows could approach an incredible $56.6 trillion by 2030. That is a massive jump from just under $3 trillion in 2025, and it's being driven by that same institutional adoption we're talking about, plus growing usage in emerging economies.
Okay, so let's shift gears from the broad market to one specific asset that's been making some serious waves, Ethereum. What we're seeing here is this really powerful combination of a huge long-term vision being met with some major investment conviction.
You've got Ethereum co-founder Vitalik Buterin himself laying out this vision. He wants to make sure Ethereum's base layer, the L1, really works as a home for our money and our digital identity. He compares it to Linux, that open-source foundational layer for autonomy. The real key here is that he's framing Ethereum not just as a financial tool, but as a core piece of our entire future digital infrastructure.
And talk is cheap, right? But this vision is being translated directly into action. Bitmine Immersion Technologies, which is already the biggest known corporate holder of Ether, just made its first major purchase of the year, snapping up another $105 million worth of ETH.
And let's put that purchase into context, because the size of Bitmine's treasury is just staggering. They now hold over 4 million ETH. That's more than 3% of the entire supply. And get this, they're not even done. They've still got almost $1 billion in cash ready to go, and their stated goal is to eventually own 5% of all Ether. This is a massive, long-term bet on the future of Ethereum.
Okay, so while Ethereum is seeing all this visionary momentum, the short-term story for Bitcoin is, well, quite a bit different. The forecast is for a period of consolidation, or what some people are calling the boring sideways grind.
And this quote from Ki-Young Ju, the CEO of CryptoQuant, just perfectly captures the feeling. His analysis suggests that the fresh capital, the new money flowing into Bitcoin, has kind of dried up for now as investor attention has shifted. But he's not predicting a big crash or anything, just a period of stability without a lot of upward movement.
And you can see that sideways action right here on the charts. Bitcoin hit a high of over $94,000 this week, but has since settled back down to around $90,600. It's exactly this type of trading in a tight range that analysts are expecting to see for a little while.
Of course, the market never exists in a vacuum. So let's shift our focus to the external factors that are always in play, politics and policy. And both of these made some headlines this week.
So there are two key developments to be aware of here. First, in an interview with the New York Times, President Trump stated he has no intention of pardoning FTX founder Sam Bankman-Fried. And second, looking a little further down the road, billionaire investor Ray Dalio is predicting the 2026 midterm elections could shift power in Congress, which could potentially lead to reversals of current policies. These are definitely important variables for the market to keep an eye on.
So, with all that context, the institutional build-out, the moves in specific assets, the political landscape, let's zoom right in on the immediate market pulse with some hard data from this past week.
And wow, this is a pretty significant number. After starting the year with money coming in, U.S. spot Bitcoin ETFs saw a major reversal. We're talking a net outflow of $1.13 billion this week alone. This signals some renewed caution among ETF investors in the short term, and it basically erased those gains we saw at the very start of 2026.
And as usual, the broader altcoin market is telling its own story of high volatility. This week, Render,
Jasmy Coin and Polygon were the big standouts, with massive double-digit gains. On the flip side, though, Midnight, Canton, and Zcash saw some pretty significant pullbacks. It's just a classic reminder of the kind of risk and reward that exists all across the crypto space.
So all of this brings us to the core tension of the week, doesn't it? On one hand, you have this powerful, long-term institutional infrastructure being built, but at the exact same time, you're seeing this cautious, even negative, short-term investor sentiment. So the big question is, which of these opposing forces do you think will ultimately define the crypto market in 2026?
AI analyst verdict: the market is building a strong institutional foundation for the long term, but it's facing cautious, short-term sentiment and some political uncertainty. Let me know your thoughts in the comments. We'll see you in the next episode.